First trading day of the last month of this year has seen the NSE All Share Index post a 0.3% rise to 39,045 points. This reflects gains posted in shares like Mobil Oil, top brewer Nigeria Breweries, and recently acquired Union Dicon Salt, Owando, and Jos International Breweries, while the laggards included Forte Oil, Livestock Feeds, Vitafoam, Access Bank, and Diamond Bank. Chinedu Ifonu is an analyst at financial derivatives company, and he joins me now in the studio to review today's trading and what to expect over the course of December. Thank you so much, Chinedu, for joining us.
Thank you.
So a good start to the first trading day of December, and the big question is, where does the market go from here?
Right.
But let's first of all get your thoughts about today's session. It's up about 0.4%. Your thoughts about the trading activities that we're seeing today?
Well, it's nice. The market is actually showing some resilience coming from last week. We had some losses due to profit taking, reflected in the market, the all share index. Now you're seeing 124-point gain in today's trading session. It just shows that at the end of the day, the market seems to be strong. Investors still seem to be interested in making the margin profits they can before the year runs out. And we definitely hope that
But
keeps going
do you
on,
get
going
the sense that
forward.
this market is expensive? It's up 38% this year.
Well, it's up 38%. Yes, and that's relatively good if you compare that to markets internationally. For instance, you just talked about the Ghana exchange, and that's up 77%. You look at Nairobi, it's up 49%. And looking internationally, you have, say, the S&P 500, that's up about 27% for the year. So comparatively, it's actually doing really good, but that's been, let's say, a general phenomenon when you talk about the African markets and emerging markets in general.
Right.
Hopefully that keeps going on going forward.
Right.
But it's been an
But is it
all-round.
expensive or cheap? Some people say it's really a play between sectors. The non-financials are expensive. The financials are still relatively well priced right now.
Well, what we're seeing in the markets are, in a sense, there is the belief that there is some bubble being developed in the market as a result of, say, hot money pouring in.
Yeah.
But at the end of the day, in some cases, you have fundamentals supporting the fact. You have recently released results, mostly positive, and that's reflected in the results in the all stock prices of the likes of Forte Oil, what's it called, Cornell, and
Transcorp, of course, as well as
Transcorp,
also
exactly,
rallied
for obvious
recently.
reasons.
Yeah.
For obvious reasons. So the market is doing well in general. I wouldn't say it's expensive though. I mean, at a PE of about 13.6 times earnings, I think we're doing
So
okay.
still fairly priced in your
Still fairly
Okay,
priced.
let's move on to certain companies. Union Dicon Salt is up today, and some people suggest that is reflective of the decision, the recent transaction that CBO did to,
Right.
and they've announced that they're acquiring a majority interest in that company.
Right.
Now the stock is moving up. They haven't done anything yet, but I guess this is one of the stories that a lot of people were expecting this year. Little companies that are underperforming, new investors coming in and turning them around, taking advantage of the Nigeria story in terms of the consumer. And we're finally seeing one interesting deal there. Your thoughts about this deal and the potential to see more deals like this going into next year?
Well, the Union Dicon deal is a very interesting deal. It's CBO Capital sort of shoring up the capital of Union Dicon, putting in some more money into the company. Obviously, there's a belief in the consumer expectations going forward. We in general, expect an improvement in consumption in Nigeria.
Yeah.
And you factor in the fact that there is an expected increase in government spending going forward. Obviously, you now expect to see some increase in consumption, and probably that's the play by CBO Capital. But Union Dicon in itself, I mean, this is a company that was obviously of great repute in the past, was once the leading supplier of salt in the Nigerian market. Hopefully we sort of see this trend continue where we have companies spotting companies that they suspect or have analyzed to have tremendous potential going forward, or some level of good potential going forward, and make such investments.
Do you expect quite a few more of these type of deals going into next year?
Yeah, definitely.
All right.
I mean, given the...
But let's talk about risks going into 2014.
Okay.
I don't know how bullish you are, but what would be for you the top risk that investors looking into this market need to pay attention to going into next year?
Well, a sector that's always interesting, for instance, is the banking sector. If I was interested in making a play going forward, I would look at, say, a long-term approach if I was going into the banking sector. But they face challenges, obviously, because of the CBN measures being put in place to create some better level of stability in the system. But if you're talking about downside risks to the market going forward, obviously oil is one that you want to point towards.
That's something to think about next year.
Yeah, we expect declines.
It's been
in
a
oil.
very good year in terms of oil price.
No doubt. And
2013, but 2014 could be a different kettle of fish as well.
we're expecting declines in oil prices going forward. You look at the international markets, there's been an increase in supply from the likes of, the Shell, Renaissance in the United States and other sources. So as we continue to see that increase in supply and a decrease in demand for the commodity, then we should expect to see a decrease in the price, in international prices, and that would spell a decline in revenues for the Nigerian government, which will now end up trickling down into different sectors in the economy. So that would be a downside risk. In addition to that, there is the expected initiation of tapering by the U.S. Fed.
It's going to happen at some point.
Definitely. Given the recent momentum in the labor market as well as the fiscal situation, we expect that should happen sometime soon. If you look at the recently released pointer by the U.S. Fed from their last meeting, if you look at the recent minutes, you'd see an indication of interest in initiating the tapering in a few months. So if we continue to see improved conditions, I think there's an expected release of the U.S. labor situation by the end of the week. If we continue to see improved conditions there in the U.S. market, then anytime soon you should expect that.
Tapering means foreign investors pulling out, selling down.
Yes,
that's the risk, right?
That is the risk. There's definitely an increase expected in rates in these developed markets. Now, if investors are looking for a flight to safety, there's no better option.
Right.
They go to these development markets, they make investments in fixed income securities, and there's better yield expected. Now, that's safer for them compared to the emerging markets, which are sometimes volatile.